Hello, good afternoon. It's Adil Fazal here, market analyst at CFDs.com. Be sure to visit CFDS.com for your trading needs and take advantage of the potential bonus offer that's available at present. Also, with regards to education, be sure to visit www.cfds.education to certainly learn more. Okay, this is a afternoon market wrap-up or midday market wrap-up of European indices. It certainly has been quite a stellar rally this morning. Now let's try and look at the fundamentals, and then we'll decide for the news flow, etc., and then come on to price action itself. Now we had the Nikkei down overnight, so the post-BOJ disappointment, just like Mr. Draghi disappointment, the actual Nikkei is certainly trading lower. If I bring up the chart of the Nikkei to show you, you can see that we had a potential topping tail. The market's reversed. Now we do still have an unfilled gap left below at 18,400, and that certainly needs to be tagged. We did tag a potential gap at 18,565 overnight. Before putting in a reversal, but you are looking at a potential tag of that 18,400 level. Now the Shanghai opposite, we had talk about potential stimulus and certainly helped the Shanghai to a large extent, and some liquidity injection, etc. And you can see here the market obviously hit the 496s back into that resistance zone. We have left an unfilled gap behind, so therefore it remains vulnerable, so bear that in mind. And there is a possibility that we could obviously hit the 200 MA as well, so one needs to remain open-minded. Okay, so we'll see exactly how the market reacts, or how the US market reacts in the afternoon very shortly. Now, given the fact that the Shanghai is into resistance and Nikkei still remains weak, yes, the rally of the Shanghai certainly has been factored into European indices, and I'll certainly discuss that with you shortly. Now, we had two main concerns overnight, basically, or going into this Monday. We had concerns with regards to the Spanish election. Okay. Now, we have had comments from Mr. Wiedmann at the moment. Let me just cover these comments. These are quite negative, by the way. Euro's ECB's Wiedmann, low rates give illusion of debt sustainability. So, anti-QE talk. Euro's ECB, Wiedmann, Eurozone states need to continue budget consolidation. Deficit reduction drive has lost momentum. Again, that's certainly a hawkish tone or hawkish rhetoric, and therefore is negative for the markets. US Chicago Fed National Activity Index certainly came in below expectations at minus 0.3. So again, these are all negative news flow. With regards to UK CBI distributed trades came in at 19 versus 21, therefore a negative again. Also with regards to concerns from Spain and Greece. Spain faces political uncertainty, but euro unfazed for the moment. So euro is currently trading at the 1.09 level, and when generally the euro is considered to be a risk-off, or should we say a safe haven currency now due to the QE trade. And you can see this rally that we've seen in the euro back up to this 1.09 level, and therefore you are going to see risk-off in European equities, given the fact that the euro is now at that 1.09. Not only is the euro at 1.09, you have this inverted head and shoulders formation, which is quite interesting. So the euro has an inverted head and shoulders formation on the 60-minute chart, and therefore wants to move higher and looking to potentially touch the 200 MA and that diagonal trend line there at 1.0920, 1.0940, and therefore that's potentially negative for European equities. So bear that in mind. Okay. Looking at an inverted head and shoulders on the euro, inverted head and shoulders is negative, net negative for European equities because of the inverse euro and obviously long equity, short euro trade. Okay, given the fact that you have QE now in full motion. So bear that in mind. Again, looking to tag this 1.0920, 1.0930 zone. So certainly keep a keen eye on there. Okay. Now, in terms of alternative economic data, the German inflation data came in, or producer price inflation came in as expected on a month and year-on-year basis. The current account slightly weaker than expected. Mr. Bubba, monthly nothing there really, other than the we have got European consumer confidence data coming in at 3 p.m. So that should be interesting as to which way the equity markets flow thereafter. Now, looking at the actual market itself, the Euro stocks, let's just look at this market. It certainly held that gap fill level and bounced quite strongly and very powerfully. Okay, so we'll certainly take that into consideration. Now, you are looking at potential retest at 3245 zone, given the fact that the euro certainly has appreciated. 60-minute chart, the euro stocks, you do have a potential here for a bull flag scenario, so you certainly have this situation here where we're consolidating, looking to potentially thrust higher, given the fact that we are potentially making a base at the 3240 level. But given the fact that the euro now is above 1.09, that's looking very, very unlikely now, especially given the fact that the US markets flushed very, very powerfully on Friday. and that certainly is considered to be a risk of negative. Okay, so a negative factor for the equities themselves, given the fact that they're playing catch up themselves. Now the German DAX itself, we certainly had a thrust higher, but that thrust certainly has lost momentum. If you go to the 10-minute chart, you can see that we have this unfilled gap below at the 10,470 level, and that zone certainly needs to be targeted. Now we did actually go back and test this zone again, certainly quite an impressive rally as such once we broke out the bearish channel. And very impressive move, a very impressive move in the German DAX. So at present it's certainly lost momentum at the 10,975, 10,800 level, and has subsequently reversed. Again, this support or the pivot low will be very important here at 10,550, 10,540 and 10,570. You have previous resistance equal support at the 10,640 level too. So again, that certainly needs to be observed at 10,650. And we'll see exactly how the markets react thereafter. But yes, you do have an unfilled gap left at 10,470, so bear that in mind. And that certainly needs to be targeted on the downside. The daily chart, the German DAX itself, yes, you've left an unfilled gap behind. We're still struggling at this 50% to 61% retracement of this high to low. And that unfilled gap at 9,930 certainly seems to be a bugbear. Not only is it 9,930, we also have an unfilled gap down here on the German DAX at 10,140. So again, bear that in mind, and obviously the gap that I've already discussed, which is at 10,470. So certainly a lot of attraction there in terms of price action lower. Okay, now in terms of the French CAC, let's just bring up the CAC itself for you. The French CAC really languishing sideways, no real thrust higher as opposed to the German DAX or itself, certainly weak. Okay, given the fact that we have concerns in Spain. Political uncertainty there, and also a situation with regards to Greece certainly is rearing its head again, given the fact that they don't want IMF to be involved in the potential bailout, and the Germans have insisted that's the case. So again, a net negative factor, so bear that in mind. Now you do have this potential here for a HNS formation as well, so again this one needs to remain open minded. You have this left shoulder here, you have the head creating this right shoulder, then obviously looking to potentially move lower. Now given the fact that you have this unfilled gap below on the French CAC, that certainly needs to be closed, and that will be a negative argument on the downside. Okay, so bear that in mind. Now 10-minute chart of the French CAC, no real, I mean, yes, we did bounce off this pivot support of 4,600, and the market certainly has gone higher up to the 4,670 level, very impressive, and looking potentially to retest that 4,660 zone, potentially retrace 50, probably more in terms of the actual move itself. So certainly into resistance at present. Now the FTSE 100 very stellar this morning, still trading back at the 38% fib on the daily chart. The 60-minute chart, very impressive. Yes, the bull flag certainly failed. We are creating a potential another bull flag, so certainly a solid support at this 6050 zone. It certainly is building a base. That's what it wants to do. That's the way in which what price action is telling you, to potentially lay another assault on the 6170 level and obviously 6200 level as well. But given the fact that oil and crude, or Brent crude made a 11-year low today, oil is certainly breaking below that $34 level. It certainly isn't looking good in terms of the Saudis pumping more, and the situation in terms of economic data doesn't exactly look very promising to help crude. So it certainly is net negative, and therefore that will be a drag on the FTSE 100, okay, for the remainder of the day. Although, given the fact that we have Mr. Wheel basically reneging on his hawkish tone, that certainly seems to be helping the FTSE 100. The Shanghai obviously up by 1.8%. That's certainly helping the FTSE, but a lot of that has all been factored into the market now. Given the fact that the FTSE itself has attempted to break that 6110, 6113 level and has failed thus far, given the fact that the Shanghai move itself has been factored in. Once we get back down to this 6100 level, it should be interesting to see whether or not the FTSE can actually potentially continue to build a base here, or obviously potentially push lower. So again, that's going to be watched with great interest. So this zone here is the 6090 zone, and the 6100 zone is going to be the key areas to watch for the FTSE. See if we can build a potential base here, and then obviously we can start to thrust higher. Okay, but it has been very impressive this morning, given the fact that the pivot low that we put in was 6044, and we're now currently trading at the 6105, 6110 level. Very interesting. Okay, certainly an impressive move on the FTSE 100. Again, people are attributing it to light volume, and obviously individuals no longer at the trading desks, etc., etc. Yes, that certainly is the case. I mean, the moves can certainly be exacerbated, but fundamentals at present, given the fact that Brent crude is certainly weak, is certainly indicating a move lower, given the fact that the Shanghai index is certainly, or being bullish, has certainly factored in the bullish move itself. Now, if you bring up the chart, the S&P 500, which is an interesting chart, you can see that it's very, very weak. The only support there is at 1992 on the daily chart. A 60-minute chart of the S&P, again, given the high volume flush, very weak. And again, the next support is 1990. So given the fact that we're already at 2020 now, we're back at this resistance zone. So again, interesting scenario, interesting situation. The S&P at the 2020 level, let's just see exactly where that would be based on our understanding here. We have bounced off at 20,006 level. You do have resistance at 2024. So again, that will be a key resistance zone and cause the S&P to certainly flush. Now, the unfilled gap is at 2004. Given the fact that the Nikkei obviously is weak, you are looking at potentially closing that gap before we even attempt to muster any type of rally. Okay, I think that's a wrap. The HNS obviously is complete, so I'll get rid of that now from a trading perspective. Okay, so you are looking at, you do have an unfilled gap here as well, which is quite very interesting on the S&P at 2041. Whether or not we can continue to float higher on light volume again, we failed on Friday, so I can't see why we should be rallying today based on that thesis. So you are looking at a potential pullback. Whether or not we can make some type of base here at 2004, 2005 is yet to be seen. Okay, so I wish everybody a happy Christmas and potentially a happy New Year if I don't do another video after that, and wish you a prosperous trading year. I hope you've had a prosperous trading year, and I wish you the best for 2016, and may you certainly get the same rewards, if not greater, in terms of trading profitability. Goodbye now.